I spoke with Affirm CEO Max Levchin today about the buy now, pay later providers' risk management, especially in light of headlines like tech layoffs and consumer stress. Here's what he said.
I think the tech community, while subject of a lot of self-important headlines, is not a huge swath of the U.S. population, and a lot of those people are still just fine thanks to the pandemic amassed savings. So while they're sorting themselves out and finding new jobs, they're able to dip into savings or even use products like Affirm to sort of continue maintaining whatever lifestyle that they need to maintain. So we're not seeing significant delinquencies from Silicon Valley, for example, or Seattle area. And hopefully will continue, but we'll obviously monitor this very, very carefully. On the other hand, folks that are kind of middle America, and that is the vast majority of our consumer, people that are 90 to 100 miles inland from coasts, that consumer, depending on where they are financially, is starting to feel some stress. There's disruptions on the margins for some folks that are, especially hourly employees that are employed sort of with the expectation of relatively temporary employment. There's some disruption towards in that world. Not a lot, not a lot. The number one factor for consumer stress that we're seeing is really things have cost more than I expected them to. Things like gas, things like food, especially if you're feeding a large family, those expenses started ballooning.
Inflation. That said, Affirm isn't giving credit as freely as it did a couple years ago.
We've been working to manage our credit results very, very actively. This sort of weekly routine during the height of the pandemic, when credit was exceptional because the government was paying everybody's bills, I would review credit results once every 2 weeks. And I felt very comfortable doing that after a glass of wine with dinner. These days, my Sunday nights are dry because I am going to go through the credit numbers very carefully, and then I have to be prepared to ask intelligent questions Monday morning. And so my attention to it has increased dramatically. But what we have been able to do is find ways to say yes to consumers while protecting ourselves to the downside. So, for example, our requests for down payments have gone up a lot. And so that's one of the ways of figuring out, is this consumer actually planning to repay? Is there an expectation? How good do they feel about their ability to pay us back 6 weeks from now, 6 months from now, et cetera?
And what happens when you do that? Do a certain number of the requesters just say, never mind?
Absolutely.
So tightening access to credit, but one way of doing it, getting consumers to self-select out by asking them to pay a down payment.
Yeah, it reminds me of the conversation we had with the CEO of Klarna a couple weeks ago on the show, too, and sort of the differences between these buy now, pay later companies in terms of how they are thinking about. They all seem to be very focused on credit and the credit worthiness of their customers, but how they're approaching it with things like, I remember Klarna's CEO talking about incentivizing people to make their payments with fees if they were late, for example, which I know is very different than what Levchin does at Affirm.
It is different. Interesting. He argued that in this environment, lenders actually want Affirm-type debt on their books because it's short-term. Affirm has staked its reputation on vetting these consumers. So he thinks they're actually going to do pretty well during this period, but no wine with dinner. He's being very careful, he says, about the kinds of consumers he's offering credit to, saying no more often.
Yeah, and it speaks to what we've been hearing in general coming out of this earnings period, the fact that you do have more consumers tightening their belts. You have lower-end consumers, for example, continuing to spend money on groceries where things cost more, but maybe not spending as much on discretionary. You have higher-end consumers that are trading lower into private label as well, something Walmart has talked about repeatedly, too. And it sounds like you're hearing that on this end of things, too. It's going to be something to watch with all the earnings, consumer-focused earnings we get this week.
The lenders, in some cases, tightening the consumer's belt for her or him.